PayPal have dropped 40% from its 52 weeks high. What is going on? Should we buy the dip? Hello traders. Welcome to Technical Analysis Workshop with Nimbus Capital. In this video series, we discuss and apply various technical analysis on everyday trading scenarios. Charting is an essential skill, but it is equally important to know how to convert an analysis into a trade setup. Today, we will be looking at PayPal. Let's get a few obvious stuff out of the way. PayPal Q3 report was released on 8th of November and the stock immediately dived 10% as the company issued below expectation for fourth quarter forecast. While we do see increase in revenue when compared to Q3 of 2020, it is quite clear that revenue seems somewhat stagnant or even a sign of decreasing for the last 4 quarters. However, to give credit where credit is due, PayPal saw a meteoric rise of 274% since the low of 2020. COVID-19 has caused explosion in the usage of online and digital marketplace and payment system. We can see this reflected clearly in 2020 Q1 to Q4 revenue growth. I believe that this 274% increase in the stock price has already priced in more growth in 2021, but the result fell short of the market expectation, and hence we also see a decline in the share price as we are experiencing now. Although COVID-19 in 2020 has boosted PayPal's transaction by a tremendous amount, it has also pushed and encouraged many other big companies to develop their own payment system, considering that PayPal charges one of the highest transaction fee for any online merchants. In Singapore, we have options such as PayNow and PayLah, GrabPay, Stripe, CardUp, or even WeChat Pay. PayPal is no longer a dominating force in the online transaction business as it once was. Looking at the chart of PayPal, it is unfair to say that the Q3 earning release was what caused the price to drop, because prices have already been falling 3 weeks prior to the earning release and there were no sign of bullish price action at all. I personally lost $5,000 on a PayPal trade that I have entered prior to the release of Q3 result. So in this case, I was kind of gambling on the fact that the Q3 result will be meeting expectation and price will gap up and it recover from the support. But in hindsight, this was quite a bad move as I have personally broken some of my trading rules. In the early 2021, PayPal was repeatedly supported at the price of 220 to 240, which forms the major support level. That level was broken through in October and November like a knife cutting through butter. The high level of volume definitely suggests institutional involvement in the sell down. What seems to be even more worrying is that during this same period, the broad market S&P 500 have actually risen by 10%. This is an evidence that the sell down is not caused by overall market weakness, but rather something that is specific to PayPal, and we do not want to be in a stock that is declining during a market rally. PayPal now have entered the next crucial price area, a previous consolidation zone between 172 and 212. Price have yet shown a decrease in the downward momentum. A consolidation zone represents a period which both buyers and sellers are agreeable on the price, hence the price goes sideways, and we have to see if there are still interested buyers at this level right now. At this present time, it is risky to assume anything, and it will be a better option to wait for the price to play out first. Considering that majority of the smart money who have bought in the early 2020 have left PayPal, it will take some time for a new batch of value buyers to come in, if the price can be considered value at all. For PayPal to recover, price need to stay above 170. Q4 earnings need to beat expectation by a huge margin since the forecast was quite bad already. And PayPal need to prove that it still have something unique to provide an edge over its competitors. I would suggest to avoid PayPal for now until we see something concrete in Q4 earnings. Even if price stop falling, it does not mean that the price will recover immediately. And considering that the broad market is still somewhat bullish, you have other more bullish options such as Apple, Nvidia, Microsoft, Netflix, and many more if you are looking to trade. And PayPal does seems to be lacking compared to these companies. Personally, making this video has been a learning opportunity for me, which is to avoid declining stock. In Nimbus Capital, even if we are buying a declining stock, we will look for signs such as bullish price action or a higher low. But in the case of PayPal, I broke some of my essential trading rules, and PayPal have reminded me why the rules are there in the first place. So if you wish to receive trade ideas, weekly market outlook, weekly webinar, exclusive analysis videos such as this one, do join our Patreon. We provide many value-added service and information for a low monthly cost. Link in the description below. So thank you guys for taking the time to watch this video, and have a nice trading week, everyone, and stay safe.